Hello everybody, welcome back. So we're going to have a look at Bitcoin now then, and basically I'll give it to you straight before we go into any sort of, I suppose, riddles and cryptic messages. I think it's going to come down a little bit, to be honest with you. Let's face it, I think it's going to come down. And when we look at this chart, there's nothing particularly bullish about it. We're tapping this level of support, which is vaguely between 46,500 and 45,500. There's not much between it. Getting rejected pretty much on the 50 exponential on this 4-hourly. We're not looking particularly strong, I have to say. However, with that in mind, you know, when we're coming down to look at the RSI, we may get a stab of bullish divergence on this one. Technically, we already have had that. So we've had our low here, another low here with a higher low there. We might get another one, and that could springboard us up. And I would say if it were to do that, we might be lucky and get up to the $50,000 zone if this happens, you know, relatively soon. And that's based on the 200 exponential where we had such a problem the last spring we had, which again was based on the bullish divergence on the 4-hourly. So it is, I suppose, in a way, history repeating on the very short-term time frames, and that's what it looks like to me. If we just cast our eyes outside of Bitcoin and move over to the DXY, so the dollar index, there is a bit of hopium here. But it's yet to be, it's yet to be confirmed. So if we go, first of all, go back to the daily. So this has been a strong chart for a little while. We've been focused on this for a little while now. We spoke on the live stream about how we got our Ichimoku conversion baseline cross, a continuation of an uptrend in play. We've been watching this uptrending and saying how strong it was going to be, marking off particular levels. This box of interest, particularly being a main area of resistance, we broke straight through it, to be honest, after we got that signal. So retested it here, got the conversion baseline, and then just went straight through it. So now we've gone up into pre-pandemic levels, but the Chiku spans touched the price action. So have we got a negative crossover here. So this particular uptrend, or this portion of the uptrend, which is based upon a strong buy signal, has come to an end. But that doesn't mean that the uptrend has also come to an end. It just means that, if you were playing that indicator, then the main slice of the price action has taken place for you now, and it's to get out of that particular trade. And we'll see where we go from here. So when we were looking at this a few days back on the live stream, we were saying, there is a chance that we do break down from here, but at least catch a bounce on this level. This level is very important because it's a 50 exponential moving average. It's also a 50 simple moving average, and it's also the top of a bullish green cloud. So, and also the bottom of the Bollinger Band. So it would stand to reason that we do find a bounce on here to start with, and I would imagine that we probably push up towards the center of this Bollinger Band, which is about 90, just above 96, right? So this is what it looks like in the short term, pushing up to 96, and hopefully we'll see a rejection from there. And this could be the start of an actual breakdown, or at least a prolonged consolidation for the DXY. If we go to the 4-hourly chart, what we see here is, it's not happened yet and may not even happen, but an incoming death cross forming on the 4-hourly. Again, we can't trade signals that haven't happened, but as far as this chart is concerned, it's looking a little bit more bearish now on the 4-hourly. All right, and so now we're going to have to start looking at 4-hourlies more frequently, because this, unfortunately, is the nature of what's going on right now in the market. It's become a bit of a hard trading environment because basically things are sideways, weak across the board, and but there's no buy signals, and there's no particular short signals either. Unless, of course, we focus on the 4-hourly, and what we see here is we've got a conversion baseline cross beneath the cloud here. So this is the opposite of a buy signal. This is actually a short signal here. We got it here, and again, that played out to a decent extent, almost the next day. And again, this is only a DXY, so you're not looking for massive crypto-style moves, but that is pretty telling, to be honest with you, that this could end up continuing to break down, because this short signal here, which is what it is, a short signal, is technically still in play. You're told to get out of this trade, just like you were told to get out of the uptrend on the daily for the DXY. You will be told to get out of the downtrend if you entered a short around that area, and at the moment you've not been told to get out of there. It's still technically in play. So we'll be looking for rejections around here as well. So it's just around 96, I would say, between 96 and 96.1, which is also very much the area on the daily for the DXY as well. So that was the center of the Bollinger Band on the daily. That's more or less the 50 exponential and 50 simple on the 4-hourly, and we've already seen since coming down that the 50 exponential has become resistance. So there's hopium involved with DXY, and the reason we talk about DXY so much is that if the DXY starts to come down, it might offer a little bit of Ooh, maybe not particular upside, but less top heaviness for Bitcoin, because obviously if you're going to get a rally in the Dixie, it's going to have most likely a negative implication for anything that's traded with dollars. And because crypto is largely traded with crypto dollars, Tether, USDC, and all the other ones, then yeah, of course it's going to have a negative impact, because those crypto dollars are worth more, which means that anything that's traded against it, by default looks or appears to be worth less. Hopefully that makes sense. But that's the reason we focus on the Dixie, and why the Dixie has positive and negative implications depending on which direction it's chosen to go in. So we'll see where the Dixie goes over the next few days. It's going to take a few days. I would say that this next week is, for me personally, like a non-trading week. Although I am lining up some purchases for altcoins. There's quite a few altcoins that I'm looking to buy, because altcoins are the ones that are going to get hurt the most. And it's altcoins that look like, to me, that they're in the best opportunities for savage uptrends, as they come down to really, really oversold areas when the market turns around, or we should say if the market turns around, but when the market turns around, they're the places that you'd want to be. I think there's going to be a resurgence in the crypto market, but let's not get too clever. We are almost in uncharted territory. Certain things that we used to use in the past are becoming less relevant now, mainly being the Bitcoin dominance chart that we like to look at so much, right? And the Bitcoin dominance chart is breaking down below a multi-year support level as well, which is good. It does indicate, by default, that altcoins are not as weak as you would think they would be. We touch supports many times on this, and the more times you touch a support, the more likely it is to break down. And if it did break down, there is a main area of support, which is basically the lowest it's ever been, about 63 to 67% dominant for Bitcoin, and that's where the market could make or break. Really, we could go into a full-on bear market, where altcoins get completely trashed, and this chart would completely reset, basically, as altcoins fall to zero, or which I think is more a more encouraging way to interpret this chart, is that it will become less relevant, and altcoins will, bit by bit, become decoupled throughout the year. But again, the whole thing is uncharted territory. We really do have to wait and see what's going on, first of all with Dixie, then with Bitcoin, and then with altcoins. But I'm still in favour of upside across the board, and just by the fact that Bitcoin dominance is tragically low and looking very bearish, to be honest. I mean, it's been bearish since the alt season began. It's been the best alt season to my knowledge. To be honest with you, I wouldn't really even count this as an alt season, although this would have been. Well, I mean, I did take part in that, but I wouldn't really say I was trading it. I just bought a load of XRP at about 3 cents and crossed my fingers and hoped for the best. It wasn't really trading. It was more of a fluke, really. But this time round, we were able to use this chart appropriately and get out of our Bitcoins and into altcoins, and now we've been playing these bounces by alternating from Bitcoin from altcoins into Bitcoin. But now I'm actually more inclined in thinking that this is going to break down further, and that the altcoins will actually continue to go up, not as a group, but individually, bit by bit. They are going to continue to show strength versus Bitcoin, and this isn't going to be the case for all, because no altcoin is created equal. But it does look like the market favours altcoins generally, and that is, I think, is the sign of a healthy market, especially with all the retailers. No one's really wanting Bitcoin. Bitcoin's like the typewriter, isn't it? Everybody wants the iPhone, which is, usually some form of shitcoin that's been that's been plugged by some popular YouTube channel. But that would appear to be why why the chart continues to look like this, despite Bitcoin coming down incrementally, bit by bit, week by week. So overall, I'm quite bullish on the market. In the short-term time frames, not particularly bullish at all. There's no reason to be bullish right now. It does look like in the very short term, throughout the beginning of this week, potentially, we do run the risk of coming down. And then with that down, the bullish divergence being triggered, having a push up towards 49,000, 50,000, and seeing what reaction we have from there. Look, we could go into a full turnaround at that point. I just don't think that the chart is quite ready for a full-on turnaround, but it could happen. It could happen. It doesn't look like we have that kind of power brewing in us at the moment, but the daily doesn't really look that powerful. The weekly, again, not particularly powerful. Well, not powerful at all. It's quite weak, actually. It's not looking very good on the weekly. But again, I can't entertain a bear market until we make a lower low on the weekly. At the moment, we've got higher highs and higher lows. So that is an uptrend on the weekly. So this is that's the overall bias, because the weekly is the one that offers the largest moves. That's where we get the most excitement, the biggest gains, and that's the chart to focus on. Obviously, it's a weekly, so it means it's a lagger. It lags behind all the other timeframes that precede it, but it shows the bigger picture, and the bigger picture does look relatively good, to be honest with you. And this is one of the reasons I'm looking to pick up altcoins as Bitcoin comes down. So rather than buying more Bitcoin, looking to pick up altcoins. I will stop doing that if we start closing candle bodies on the weekly below 40,000. I would definitely hold my breath at that stage and wait and see how we go. But we're not there yet. We may not get there, but we could, and this is what we've got to be prepared for. Again, this week for me is just going to be a wait and see, watch and wait, and see how traditional markets, Dixie and Bitcoin behave. Which I honestly think there's going to be a little downside first before we get picked up, potential bounce, then rejection, and then see what happens after that. Right, I'll leave you with there, guys. I hope you have a nice day. Anyway, thanks for watching. Take it easy.